Welcome back to another Zero-DTE podcast. We're on Season 2, Episode 21, and today we're going to be talking about flying high with the Batman strategy. So stay tuned for that. If you're interested in becoming a pro trader, check out the link in the description to a 4-week trial where you can learn all the tips and tricks you need. Enjoy.
I gotta fix that. Apparently the intro to this is disconnected. Don't know when that happened. All right, how you doing, friends? Welcome to another episode of Zero-DTE Final Hour, and I'm your host, the Zero-DTE coach, Ernie, and I'm thrilled to have you with us. Our goal is to help you become a consistently profitable, independent, professional level trader, and we've got an amazing show for you today. Today's episode, we're going to be diving into all things FOMC and all the things that surround that. Today's the day before, well, they actually started their FOMC minutes or meeting today, and then tomorrow we get to hear the results of that meeting and whether or not they're going to increase the current rates. Right now, if you go to the Fed Watch tool, you'll find that there is a general consensus that they'll increase the current rate, which is sitting at about, I think, 475 basis points or 4.75%, 4.5 basis points to 4.5, by 25 basis points, getting us right up to about that 5% level. Now, there's a lot of people talking. Now, why is this of interest to us here at Zero-DTE? Well, I'll tell you. Of course, interest rates are where it's at. That is what's causing the primary volatility that we have in the market. And volatility is a central thing to being a premium options collector. And that's primarily what we do. We put on asymmetric premium collection strategies that are for that very final day of expiration. We're taking the smallest amount of time with the most rapid rate of decay of premium of options on the SPX index. And that's how we gain an advantage. Now, when we have something like the Fed out there causing all kinds of ruckus, that helps us because that really rises the level of volatility that's out there, that inflates premium, that gives us much better pricing on the strategies that we use to collect premium. We get in at better prices, less risk, more potential reward. All's good. So that's why we're so interested in that. And we do a particularly unique form of Zero-DTE trading compared to the way most other people are doing it. And if you look at most other retail services that are out there, they're generally putting on like an iron condor, super wide spread, like 5 or a 10 delta, and they're putting it right smack dab in the middle at the money, hoping to collect a tiny little bit of profit by taking a huge amount of risk. And generally those strategies, that's exactly what they do. They collect tiny little bits of profit, and then they're taking huge risk every day. The risk is so big, in fact, that they don't even allow themselves the full width of that strategy that is supposed to be like a 95% probability. So what they'll do is they'll cut it short with stops so that, in fact, that they're only taking really maybe a 65% probability that they'll be in profit before they get stopped out. That seems just crazy to me. And the reason why they do it is that their gamma risk is so high that if price tends to move away from that center point where that at the money strike, then almost immediately they're in the red, and in the red by some huge amount. Most of these trades are going after or putting up, say, about $1,000 of risk, going after maybe $50 of profit. And so you're sitting there trying to collect $50, and all of a sudden you find yourself $200, $300, $400 down and potentially going to lose $1,000. You freak out. And so what you do is you get out of that trade as soon as you can. Most of these strategies have devised the idea that they just put in stops to prevent that from happening. And of course, in these days, at least in the past couple of weeks, they've probably done okay because the movement in the in the market has been relatively small most days, but we've also had some gargantuan moves, and those are the days when those strategies have just completely lost it. Now, for us, those big moves and even the small, medium-sized moves can be profitable, the big moves particularly. The small moves, not so much, because we're really looking for a directional movement. And the way we present these trades is that we're generally taking an out-of-the-money butterfly, and we'll put it way out of the money. We'll take a very, very wide butterfly, and we're looking for an asymmetric return. And so by pushing it very far out of the money, we're looking for a tiny little bit of risk for a very large return. As an example, we might put on a 30 wide butterfly. Now, if that butterfly didn't cost us anything, there's a potential of $3,000 of profit in that butterfly. We push it far enough out so that our risk to reward is approximately 10% of the width. So our cost of that trade is about $300, or $3 to a 30 wide. So that's what we're looking at, putting up a small amount, let's say, just to put it in equal numbers. If they're going after 1,000, we're going after 3,000. If they're going after, say, 100, let's say, we're going after 3,000. If they're putting up 1,000, we're only putting up 100. That's the big difference. So essentially what we have is an opportunity that is anywhere from 20 to 30 times more cost efficient, or more efficient use of your capital. Yet our win rate isn't that much different. So if they're going for a 65, 70% win rate, we're around a 50% win rate, but our return is 10 times as much. What that results in is very little drawdowns, small drawdowns, very tightly controlled equity curve, so we don't get a lot of volatility. Our equity isn't going all over the place, and steady, sustained returns. And we never are in a position where we're scared or concerned that we're going to lose a big amount. Our risk is already well defined, so we never have to worry about that. So when we go into an event like tomorrow, where we're expecting huge moves, those don't concern us at all. As a matter of fact, we say, hey, bring it on. That's exactly what we're looking for. We relish the chance to get into one of these high volatility situations. As a matter of fact, in a way, you can say that our service, our strategy is anti-fragile. And if you know the concept of anti-fragile, that means that the more stress that is put on a system, the stronger the system gets. And that's exactly what we're like. When we have stressors put on our system, we get stronger. So more volatility, we get stronger trades, more profit, more consistency. So that's like the opposite, I think, of what most retail traders are used to. They look at volatility as being the bugaboo. They just want to stay away from it. It's just a big headache for them. For us, it actually causes us to breathe a sigh of relief, and it's relaxing, and it sounds almost counterintuitive, but that's the way it is. We know that we're going to make a lot of money in volatile days. And we know that tomorrow is probably going to be a volatile day. There's going to be a lot of different expectations. Actually, most people don't even know what to expect tomorrow. I go and I look at the Fed Watch tool, and that's where the bond market is essentially laying odds down on what they believe the rate hike will be tomorrow. And from what I've seen, they're anticipating a 25 basis point hike, which isn't unreasonable considering where we were before, except that the Fed's rate hike program has started to crack the system. And that's what they were really concerned about, cracking the system. In other words, Jerome Powell had said that they want to keep on pushing rates as high as they can go until they break something. What do you know? They've broken something. Now, they've been talking a lot about employment and how strong the employment market is. And sure, you look at the unemployment reports, new claims that are coming out, and it looks pretty healthy. Those new claims keep on going down. But there's something wrong with that. There's some disconnect. And the disconnect is that I keep on seeing all these huge companies laying off 5, 10, 15,000. As a matter of fact, Amazon, They laid off already, I think, 10 or 20,000. They just announced another 5,000 that they're laying off. Why isn't that being shown in the unemployment reports? Everybody has a different excuse. Oh, it's all delayed, or they don't count people that are still on severance or whatever. They're unemployed. It's as simple as that. It's not being reflected in what the true health of our employment situation is. Not at all. And so I think that's a big misnomer. And when you start looking at all the economic reports, they're consistently contracting. So where a lot of these reports will have a peg at 50, and if it's above 50, then it's an expanding economy. If it's below 50, it's a contracting economy. Universally, these reports across the board for months and months have been below that 50. That means that we're contracting. That means that the economy is getting weaker. Yet they keep on telling us it's the strongest economy ever, and it's all bull. It's BS, complete BS. Unemployment is way higher than they purport. The economic situation is way dire than they say it is. And I have to conclude also the way they measure volatility and inflation. I think that inflation is also way higher than they're currently stating. As a matter of fact, I believe that it is double what they're stating. And it just seems to be all a big smokescreen to try to, I don't know what, I'm sure the purpose is political, 100%. But anyways, that still has provided us with a very ripe opportunity as Zero-DTE traders to make some really good money. And so that's all we care about, right? We're in it to win it. And we're in it, with a strategy, with an asymmetric returns, and also collecting premium. Probably the safest way, the most solid set of edges that you could probably imagine. But we go one step further in this service anyways, where everything about us is not about the outcome. It's all about the process. So we engage in a continuous improvement, an agile type of process where we're constantly reflecting on everything that we do, looking at the moves and the decisions that we make, recording those, logging them, journaling them, and on a weekly basis, we then review it to make sure that we're at no point starting to exhibit patterns of bad behavior. And if we do, we recognize it immediately and then come up with ways to then correct it and then get back on path. That's exactly what you'll learn here at Zero-DTE. So there you go. And we have some people in the comment section. I want to thank you very much for coming here. If you have anything to say or questions, please ask it. If you're out there, please give this live stream a thumbs up. Really appreciate it. And subscribe. That helps us out a great deal. And if you're interested in the service, go down below to the comments. You'll see we have a 4-week trial. You'll learn how to become a consistently profitable, independent trader at a professional level. So that's what we do. All right. Where are we going to go from here? That's the big question. Well, we don't know. Today is one of those days where the market, now here's the situation. Today, we know that the Fed has broken things. How do we know that the Fed has broken things? Because we've had the recent failure of banks. First, it was the Silicon Valley Bank, SVB, that failed. Then it was the Signature Bank. Then it was Credit Suisse. And then it was this bank and that bank and all these other small banks. Now the number is up around 100, 120 banks that are showing extreme stress or failure. And the Fed and Janet Yellen with the Treasury have gotten together last week to come up with a plan where they're going to bail out all the big banks. Just the big banks, though, not the little banks. So if your money is in a little bank, you're screwed. But if you're in a big bank, you're okay. They're going to bail you out. So what's that going to mean? What is that unintended consequence of them only servicing or protecting the big money? Think about that. People that are in small banks are going to look at that and say, heck, I'm pulling my money out of this small bank and I'm going to put it in the big bank where it's protected. Now, what happens when that happens? They pull all the money out of the small bank. There's a run on the small banks. They start failing even more. It's just insane the way they're operating. Janet Yellen has got to be the stupidest Secretary of the Treasury ever. She had already proven that she was the stupidest chairman of the Federal Open Market Committee. Jerome Powell's right behind her. As a team, they're like, I don't know, they're 2/3 of the Three Stooges. It is perhaps the most, I guess you could add slow Joe Biden in there, and now you got the complete Three Stooger trio. We can extend that too, because we have Mo, Larry, and Curly, right? Where they can add Shemp and then Curly Joe in there. So I'm sure that there's another two Stooges that we could include in that. But it's idiocracy. That's what it is. It's idiocracy. We're living in idiocracy. They're blaming people. They're blaming citizens. They're blaming people of the United States for their desire or their belief that there's going to be a recession for the recession or for inflation. They're actually blaming the inflation on people's belief that there will be inflation. Have you ever heard anything so stupid? When we all know what the real cause of inflation is, and that's government spending, 100%. There is nobody else that can cause inflation but government spending. They spend. The Federal Reserve then monetizes that debt because we're broke as hell. We have no real money to spend. So they have to monetize that debt, thereby creating more or an increase in the monetary supply, creating more dollars, chasing after fewer goods. That is what causes inflation. And it's been happening for the past 20 years. Their spending has increased over and over. Every year, the debt gets bigger and bigger. Just recently, they've had to increase the debt ceiling. Otherwise, they would be broke. And when they increase the debt ceiling, spend more money, sending hundreds of billions of dollars overseas to errant kinetic wars. Don't get me started on that. They finance that debt, and then they create more money, increasing the monetary supply. You look at the M2 numbers. Our monetary supply has just gone off the charts. It's unbelievable. Inflation is caused by government spending, 100%. Don't let anybody fool you into anything else. Don't listen to a Paul Krugman, that Nobel laureate that has got to be the stupidest smart person on the face of the planet. He is 100% in bed with a political party, and it all has to do with politics. It has nothing to do with what's good for the American people. That's where we are. I'm not trying to be political here, but I'm just stating the obvious. The Federal Reserve is supposed to be a nonpartisan, non-political entity, but that couldn't be further from the truth. Now, they don't subscribe to any one party. I would say that's probably true. They're bipartisan, but they 100%, whatever administration is currently in power, kowtow to those people because they're afraid of losing their jobs. Just keep on doing what that political party is in place. And look, it was just as bad with the last administration and the administration before that and that and that. It goes on in perpetuity. For the past 20 years, we have been building up this problem. The crash of 2008 and 2009 was just a sideshow compared to where we're going. We haven't stopped with this overspending. This is where we're going. This is where we're going, and there's no end in sight until the entire thing is broken. And we're getting to that point. We're getting to that point. The banks have succumbed to this. It appears to be a systemic problem that will continue to manifest itself. I don't think anybody has learned any of their lessons. So why is the market up today? There's a good question. Why is the market up? Because the market is super short-sighted. That's the reason. Hold on, I got to check my trade here because I see the market continuing to go up. It's got to go up a little bit more before I start seeing some profits. So anyways, the market is up today because Wall Street is looking at the fact that the Fed broke the economy, broke the banks. Now you would think, wow, Wall Street's up because the banks are failing? Yeah, because we live in a kind of opposite world where anything that bad happens to the economy is actually good for the market because then the Fed may do something that's more accommodative in terms of monetary policy, which the market likes, right? So they're constantly chasing the market instead of leading it. So bad things cause the Fed to be more accommodative and creating free money for Wall Street. Wall Street likes that, so therefore the market goes up. So in other words, the Fed, who's talking about their solution for fixing inflation, and that's to put people out of work, their idea is that, hey, we can put people out of work, they will spend less money, there will be less demand, therefore inflation will come down. It is the stupidest. I mean, this is the level of stupidity that comes from Jerome Powell and Janet Yellen, that by killing people's jobs, putting them out on the street, putting them through stressors that are just unbelievable, basically breaking down our entire culture because of it, that is going to help solve the inflation problem. They couldn't be further off mark. What we really need is more people at work becoming more productive and thereby creating cheaper and cheaper goods, and that's what will bring inflation down. It's just insane, absolutely insane. And I get all clamped about this stuff, and I shouldn't be, because I don't have any real power to change anything out there. All I really care about is whether or not I'm making money for my family and providing a roof over their head, etc. And from my point of view, all of this stuff that they're doing is actually good for me because it increases volatility. It makes our job a lot easier. We can put on better valued trades, make more efficient use of our capital, make more money. Show other people how to do it. They get all excited about the service. They come in, they buy trials, they buy yearly memberships, and I'm all good. They're all good, right? We're learning how to cope with a very low risk strategy for making a lot of money off of the malfeasance of the Fed. Did you hear that little ring? That was another order coming in at Zero-DTE. So yeah, so from my point of view, all's good. But when I have to step back and look at what they're doing to this country that I love and this world, it just makes me incensed. There are a lot of people here that just cannot cope with that. And so I feel for those people. But what are you going to do? I'm just one guy. I can put my message out there and hopefully other people will hear it. I don't know. I don't know where to go from here on that. Now I'm getting depressed. What am I going to do? Drink more coffee. Death Wish coffee. Strongest coffee in the world. That'll lift me. So anyways, yeah, that's why the market's going up today, because the market is anticipating that the Federal Reserve will look at these banks they're failing, right? And because they're failing, they realize, oh, crap, we went a little bit too far with our interest rate hikes. Maybe we'll pause a little bit. And so the market is anticipating a pause message coming out of the Fed tomorrow. Now, that's going to be interesting because right now, the Fed Watch tool is predicting that the Fed will still go through with a 25 basis point hike. And if they do, that will totally smash the idea of what the market is anticipating, and that's a pause or no hike. And so if they go to no hike, then there's the idea then that if things get too hairy with the banks, that the Fed might start putting out a narrative that they're considering pulling back on their rate hikes. That, my friends, believe it or not, will cause the market to skyrocket. Because they don't give a damn of what the bad things that are actually happening to our country. All they care about is the cost of money and whether or not it changes the valuation of the companies that they're investing in. And therefore, the market will go up even though Rome is burning. That's where we're at. That is where we're at. Let's see. Let me check out the peanut gallery here. And we'll do a little roll call. And we'll see who has joined us here. We have Iz, how you doing? And with his double barrel hello. And Black Beauty Machine. It's the first time I've seen you online here. Although you may be a member, I'm not sure. I haven't done a live stream in a little while because I've just been super busy. But I am coming back. I am back doing these final hour shows in perpetuity, forever. Monday through Friday, 3 o'clock to 4 o'clock every day, we'll be talking about the market and talking about Zero-DTE and how you can become anti-fragile and become a professional trader. And we have Jamo Jones. How you doing? Nice to see you. And Ack the Midget. Wow, that's quite a name. I'm glad that I was able to help you out. And we have Male Gossip is a Disease. Now that is a handle, huh? Gary Wall, how you doing? Nice to see you. Oh, yeah. Yuck, yuck. That's old Curlyism from the Three Stooges. Thank you very much. There is. Beta Ada, how you doing? These people aren't stupid. The Fed, it's by design. I know that. Well, no. There's such a thing as street smarts and book smarts, and you might have book smarts, but you don't have the street smarts. If you don't have the street smarts or the understanding of how things actually work, and you're steeped in the book knowledge, sure, you could be an expert at the books, but it doesn't translate to real life. So that is being smart on one hand, but being stupid on the other. And we need people that are smart on both. And we don't have, that's for sure. So Beta Ada says they hate you. G-Card, he's teaching today. Yes. Teaching. Judah Barak, nice to see you. Government is the real mob. That's absolutely true. And let's see. Tay, how you doing? When this white man speaks, I listen. All right. And Jamo Jones wants me to punch something. He's talking about Bitcoin Bob back there, but I can't punch Bitcoin Bob today because Bitcoin has been on the rise, and I just cashed out all my Bitcoin on that move up so I could buy my wife some toys. So there you go. And where we are, we're a half hour into the show. It doesn't look like the market's going to take off from here. I don't have anything to report. It looked like we were going to blast through this level at 40.22 and 40.31, and it's been a slow go at it. There's been some hesitancy during the mid part of the day, the late morning and mid part. We never really got a move on. Maybe we'll get it right at the end of the market and everything will turn out okay, but it's just going a little bit too slow for me. That's about it. Unless there's other questions out there, I'm going to say that this is about all I have to say. It was a rant. I feel all, like I said, verklempt. I feel tight now. I got to get loosen up here. And I'm a little bit under stress, not because of this, but my dog Nima yesterday got sick, and she was unable to stand up. And it was something to do with weakness in her joints, and it all, we discovered, came from a tick-borne infection. And so she's been in the hospital overnight last night, and it looks like she'll still be in the hospital tonight too. And we're hoping that she gets better and then comes back home. Her brother, Obi, is here anxiously waiting, wondering where the hell's Nima. So I'm a little concerned about my dog, and so that, and then I get all riled up about this economy and the jamokes that we have running the financial system. It's just too much sometimes to bear. So I need to go back, maybe do some yoga, maybe I'll play a little bit of pool. I got my pool table here. Maybe I'll shoot around for a bit and then go for a nice long trail walk and get all this behind me. So I want to thank everybody for showing up today. That's about all I have today. Peace to you all, and we'll see you tomorrow for tomorrow's final hour show. We'll go in depth on what the Federal Reserve did, because we don't know what they are going to do. That'll happen tomorrow at 2 p.m. Eastern Time. And again, if you like what you see here, give this show a thumbs up. Subscribe if not already subscribed. And if you want to become part of our gang, go down below to zero-dte.com/try. Join us for a 4-week trial. You won't regret it. Guarantee it. All right. Take care. Peace. Time for the music.